Good morning, guys. Good morning, good morning, good morning. I got a lot of really interesting stuff to show you here, but bear with me a second because I got to set everything up. Right, tell me. Okay, we're seeing the screen, right? Okay, let me clear this up a little bit. I want to go filtered. So we're going to get rid of this number. And just bear with me one more second, guys. I want to get the algo going. Okay. All right. Where are we? Hey, good morning, everybody. Good morning. Good morning. Good morning. Good morning. All right. I got a very, very interesting little play here. Let's see if this actually shows up. You guys don't have this variant of the indicator. I actually made it just a couple of minutes ago. Why is this not showing up? That's interesting. Let me see if this. Oh, is this the trend? Sorry, I'm in the. Sorry. Okay, you know what we're gonna do? I'm gonna call out. We're not gonna trade my stuff live. I'm gonna have to call this out. Hang on a second. Scalp, trend, no, scalp. I want scalp. I think leave. Yeah, here we go. Big pop on the thing. Yes. Actually, damn, this popped up. Let's get long here. 45s, 47s. I'm getting long here. I'll tell you what's going on. Done. Trade done. More. Get long. And it's all going to get done. Okay. Sorry, guys. It's really hard for me to share the screen and share the trading screen because it's very distracting. So let's just me call it out. I'll make the trades and then I'll show it to you later. Okay, how about we do that? I'll explain to you why I'm doing a lot of different things. Good morning, guys. Good morning. I think we're just going to do it this way because I noticed I really screwed up a lot of trades for execution purposes because I am trying to show the trade and show the screen. Everybody can see the screen. You don't need to see me trade. I'll do it off screen and you guys can see it afterwards. Does that make sense? Should we agree to that going forward? Okay, awesome. Let's do that. So I added a second turn. This is what you're looking at right now is a chart that only has turns on it, turn signals on it. And then I have another chart that has only trend signals on it. Okay. So the trend signals, obviously were early. And then, then we had the CPI reverse spike into the open and then a big reversal to the upside. But the thing that you're going to find really interesting is that the turn signal has, I called it turn two, just for lack of better words, and we'll try to figure out maybe a better name for it. But the original turn signal that we have always happens like in a red zone, right? So we're turning, like right now, if we were going to get a original turn signal, we'd have to have a red zone and a turn back out of it, right? And I realized that while that's a really good signal, we're missing a huge bunch. Like if you think about this, we're in trend, and then price like kind of tests the low end of the green cloud, and then ends through the close, right, to the upside. That's a massive strong signal to the upside, to the buy side, and you want to take those signals because those are strong momentum signals in the move. And you can see the other way around here. So, here's the original turn signal in the green zone, right? But then you also have what I call turn 2 signals in the red zone. And obviously, depending on how much room you want to give it, these are actually still pretty good signals, to the downside. Now, obviously, here this was CPI, so you're not going to trade CPI because it's a complete mishmash. Where this really, really, really works super well is actually on currencies. So if I were to take a look, and then currencies, obviously, we're going to go to the 5-minute chart. And let's just take a look at, I don't know, at cable here on a 5-minute chart. And you see, look how many great turn signals you get. This is the turn 2, where you're selling in the red instead of selling in the green. You're still catching huge amounts of really good trending moves here. And now, by the way, we have a turn buy in cable. So let's just get long cable here at 38. And here, I think we have to trade this again. The ATR on cable is probably around 87 pips. So you can only maybe make 5 to 7 target here. But we're at 38. Let's just see if we can go to 45 as our target for the move, and see if that works. I can't trade FX on my platform, so I'm just calling it out. But let's see if we can get 45 out of it. So it's 43, 44. Okay, great, 45. That's good enough for the kind of ATR we have. And it's just, listen, it's a really good example of doubling up the opportunity by looking at turn signals in the strong zone versus just the weak zone on the move. And in FX, you just have so much stronger continuity signals like this that really work super well. I'm going to show you much longer term variants of this, but just kind of want to let you absorb some of the stuff. We don't have. Well, let's go back to. This is the trend indicator. Sorry, I'm going to get a whole bunch of charts here. So this is trend. This is a trend. This is, I don't know what the hell this is. This is garbage. Scalp with trend. Oh, no, let me just do this. Hang on a second. Scalp trend. Oh no, sorry, that's not what I want. I want scalp with turn, just scalp with turn. Sorry. I got myself confused because I have so much stuff. Look at the power move in the in NASDAQ. Look at that huge power move. It could have had a lot more points, but it's just not our setup. Okay, so let's take a look at the YM here too. What's giving us? Is it giving us any signals? No turn signals here because YM has just been in a monster rally. It looks like we're breaking out everywhere, all across the board. What's happening on the trend side? Let's see where the we'll get rid of this. I have a trend, a long time. Any trend signals here? No, we're just everything is running away at this point. Just a massive runaway move here. I actually, if you guys just want to fool around, I kind of like. Let's take. I'm actually going to take a short here on the S&P at 47. I'm going to sell this. Where's my thing? I'm going to sell it with 8.2. 8. Actually, I should sell with a 4.2. Sorry. So it's not any. It's just me fooling around. But we are. One of the things that I like, S&P is always a much more mean reverting instrument, and when we get so far, what I call in the white clouds, when we get so far away from the moving average envelopes, the probability of some type of a correction is really pretty strong. So at 47, that was a pretty good print. I don't know if we're going to get to 45, but I think we'll certainly get to 46. Maybe I shouldn't be greedy. and I should just take small amounts. All right, maybe I'll just take a point, see if I can get a point out of this thing. Yeah, okay, so and of course now it's gonna collapse. But again, this is just me fooling around, scalping around. But you know, you get the idea of why I was shorting it at this point. It's just when it's so far above the cloud, where it's like literally the you know, the move from here to here is 4 or 5 points, right? Then you have just a easy short. Now, one of the reasons why I like to short the S&P, not NASDAQ, is because NASDAQ is like the pound. You know, it goes always higher before it goes lower. S&P is so much thicker. It's always naturally mean reverting. It's always naturally mean reverting. You could have done, like, here's the move where, you know, where the price is 33 and the moving average is around, again, 4 points away. You could have done the same thing. Where it's about 4 points, which is 1 basis point of the whole value of the S&P. It's 4,000, right? So and now it's finally coming. Actually, I could have had the 45s. I was just, you know, if any of you guys shorted this, you basically have scope of like 4 points, right, to get just to the moving averages. So even if you took half of that, which is I think is a reasonable level, you could still take that opportunity. It's just, you know, we're always trading trend, but when trend really runs away, we have a chance to kind of take the trend back and trade it to the downside. I don't know how that would have looked on the YM. So the YM is like a 30,000, right? So how far away were we from the moving average? This is like 682, and it went up to about 720, 730, 150. So 1 basis point. Wait, I mean, is that correct? Hang on a second. This is 4,000, 1,000. This is 4. 34,000. 300 times 100. 30,000. Oh, so it's about, sorry, what would be the one? Let's say it's 40,000. It's 40 points. 40,000. Yeah, 40 points. So on the Dow, you probably needed like close to 80 points away from the moving average, at least. But 3, 4, 6. So if you were like sort of here, 680, 750. Yeah, but that's correct. That actually works out exactly the same way. So 40 points from 90 is about 730. That's how far it extended. So if you're like, you guys you see what I'm saying to you? I'm basically the only way I'm going to short something is if it's a 1 basis point away from the moving average. So it's got to be super stretched out. So on a Dow, which is let's say I'm rounding up, it's a 40,000 unit thing. By the way, I'm just actually, let's watch this. Do we have, this is the trend. Let's take a look at the turn. Is this my turn? Let's see if there's anything on the Dow on the turn side. No, we're not getting any turn signals just yet. And look at the you know, like look at the NAS. NAS is just so monstrously high. Now, actually, now I'm going to probably short the NAS too, because why not? Let me do this off screen here, because I really like. Let's short it here at 33.50, 34. I'm short 34s, just looking to get 5, and I may get run over because this is a, wow, you know, the NAS is a really tough trade. But you know, I'm in here again, just fooling around, because it's the blue envelope is 905 and it's about 30 away. So it's literally like you know, a basis point away, a little bit more than a basis point away, almost 2 basis points away. So it's like 13 is a basis point, twice would be 26, which is 30, which is where I want. Like basically it's got to be 30 up from the moving average, like a full 2 basis point away because it's such a volatile thing, and see if I can take some of it back right now. So I'm still hanging this trade. Let's see if we can get some of it back. Just on a mean reversal, but you see how much tougher Nasdaq is as far as a because it is a vertical indice, and they can just squeeze you mercilessly. What's my TP here? 29. Let's see if I can make 29. It was a little bit early on this move, but I mean that was a decent decent short idea if you're just looking for a short scalp mean reversion to give it a little breathing space, because we're certainly not going to get any trend moves for a while because the move has just been so explosive this morning. And then I'm going to go back and just kind of go through my thoughts of how I really want to just construct the trades on a continuous basis, where the best opportunities lie on an intraday basis as far as just liquidity goes. Because I think one of the problems is if you're trading like late Asia, early Europe, you're going to get trapped into a lot of very, very slow moving markets, and it's really important to understand how to stay away from those. All right, I'm still hanging in there. Let's give it a little more breathing room here. Let's see if we can fight the shorts. They're definitely, fight the longs. The longs are definitely just brutal right now. And so, kind of to measure this out, we're now at around 15. So you would have to be about 45, which is like around here, for a secondary. For a secondary position. If I get tapped out on this, the second short is probably going to be a decent one as well. Like. Well, one of the cool things about our setup, and one of the cool things about how we have the indicators visualized, is that we can, occasionally go, go against the market at very, very specific points. I actually should probably, I think I'm going to let's give it a shot. I'm going to wait. Let's give this a little breathing room here. Let's see if, because at 45, we're now again 30 away, which is about 2 basis points away. Let's just short this over here. Okay, so I'm short 45. So what's my average? It's around 39. So let's modify this to is it 20? So about 35. Let's put this to 80. Give it a little breathing room. Okay, let's see if this comes in for me. NAS is a real tough bear. You have to trade it very small, and you got to be prepared for just vicious squeezes against you. I'm only doing this because we don't really have any signals here. But the rule of thumb is a pretty decent one, like a rough rule of thumb of where you want to go. If I was at 45 originally, the second entry actually is fully profitable. It's just that I'm nursing the first entry. That's keeping me from taking the full profit, and I'm hoping that that the blended price is actually going to go my way. But we'll see. The mistake of my trade here was just coming in a little too early on the move, because NAS does have that huge second wave almost always. So this trade theoretically would have worked already, but now I'm kind of forced to have to manage it to the second exit. And we'll have to see if that works out, because I made a tactical mistake on the first entry. But we'll give it a shot. Let's see if we can come into 34s. Maybe not. But we're gonna, we're gonna stay with this. Um, Getting close. Getting close. It's around 34.50. Getting close. I'm gonna stay with it. Stay with us and see if I can actually get it done. But I may not be because I made a tactical mistake. But let's see. 36. Okay. 36, 34. Should be there. There we go. Okay. Well, that was a big bear of a fight. I don't know if you guys stuck in there with me through it, but you know, let's kind of like play out the principle of what I was trying to do here. And remembering that by the very nature of price action, a lot of these numbers have already changed. But I'm going to show you the principle of what I was doing. You took it with 4. Good job, Connie. It's good. And I was I was tactically wrong on this thing. So let me just sort of show you what I was trying to do. So the first place we're trying to short is like right around here. And let me just do the settings. Sorry. And the whole idea is, basically at the top of this candle to the top of the green cloud, right? We basically need to have between 25 and 30 points. Why 25 and 30 points? Because NASDAQ, if the rule of thumb is like, okay, I want 1 basis point, which is 1/1000th of the index extension on the S&P and the Dow, which are not as volatile. The NASDAQ is, you have to just basically assume it's twice as volatile as the Dow and the S&P, right? In percentage terms, for sure. In percentage terms, for sure. So I'm just gonna give myself a bigger space. So that pretty much was over here because the top of the cloud was about 07. The top here was 35. That was basically 35 points. But as always with NASDAQ, even that is not enough, right? So the first entry was over here, but it actually extended yet another 10 points to the 45s, where the move now goes to around 19 to 45s, which is also about 25 points, and it continues to move. So by the way, now where are we now? So this is 37, and this is like 54. So that's not quite there. So if we get up into this, if we get up to about 65 on this move, if we get this candle kind of ends on the high of 65, we're going to try and do this again. We're going to try and short this again, because again, it's going to be at around that 30, 2 times the 1 basis point structure. But we've got to be super patient with this. Let it get up there into the 60s, because that's how high it needs to be in order for us to have a reasonable chance of doing it. And sometimes, and look at this, it was just, I was going to say, sometimes it's just so fast, you're going to miss it. But we're going to be patient with this thing. Okay, I'm going to short the 61s on this. And let's see if we can, if tactically, maybe not even there, it still continues to extend. We might have to do a secondary add into the 70s, just like we did with this one, but I think we have a reasonable chance here to take it back at 56. Let's see if it comes in. And the other thing is about all of these mean reversion trades, you got to understand, you cannot be greedy. 5 is all you can get. Just like probably 1 is all you could get on the S&P. 5 is all you can get on NASDAQ, and 10 is probably all you can get on the Dow with a high degree of confidence. Everything else, is being too greedy in a brutal, and there we go. So that, that works again. So kind of fun, right? I mean, like, we're banging away. We're up like 50, 60 bucks already in the account from the time I started without really too much effort. Without us, having any of our traditional signals working, because we're so way out on trend. When you're so far out on trend, you can't really do anything but just kind of scalp against it. Anybody else play with me today? Anybody took those trades right now? Who's in the room today, by the way? Let's see. Oh, we got people. Good. All right, everybody's in the room. And now, of course, you have a sharper, stronger drop off. But the problem is that you don't know when the full corrective move now is probably going to be 20 points. It's probably going to go into the 40s. But you just don't know when that corrective move is going to happen to be able to take advantage of it. So it's just an interesting way to scalp. And see, now it's good. Now it really releases the valve, right? It releases that big valve in the Nasdaq and comes right back down. But what I love about this is that this is a very quantitative way, very quantitative way of discerning when you want to sell the top and buy the bottom. While we're waiting for our traditional signals to appear, because it's intrinsic to the instrument itself, right? We're adjusting for Nasdaq, we're adjusting for the Dow. So sort of kind of rule of thumb, we want 25 to 30 points away from the moving average envelope on the Nasdaq. We want like 40 to 60 points on the 40 points on the Dow is good enough, and want about 4 points on the S&P. Using those metrics, that's pretty good. It puts us over here in a great trade. If this is 45 to 48, we could have pressed it over here. That could have worked a little bit. S&P is, I think, in my opinion, the granddaddy of great mean reversion trades, where you pulled away so hard. When you pull away so hard from the moving average that you have a reasonable chance to come back to it. I mean, this is early in the morning, and you're looking. This is 13, and the envelope is 17. So this is again 4 points. 4 points down. If you bought over here, you certainly had a chance. For plus one move over here. But the S&P is kind of like a really granddaddy of this kind of scalp move. Let's take a look. Do we have any turn trades? I'm looking to see if I get any turn trades in the S&P. So far, no. For the turn trade to be real, now this is what I call turn green, or turn two. By the way, we got to figure out clean ways to distinguish this these signals. This is the turn when the trend is up, right? The turn two happens in the green zone. When the trend is and turn one happens in the red zone. When the trend is down, turn two happens in let me just find it for you. Jeez, it's kind of hard to find it. Yeah, when the trend is down, turn two happens in the red zone, and turn one happens in the green zone. So I like completely at a loss of how we call these things, but you get the idea, right? You get the idea. The interesting thing is that I want to show you is that I really like them both. I like both of those signals, whether they're happening with strength or with sort of a counter trend move. And all of this brings me to my final thought of the day today about sort of all of our trades. Why I'm trading a lot better today than I was trading even yesterday and the day before is because I realized the single most important thing that is really the foundation of what we do, and I deviated from it a little bit by last couple of days by trying to get too cute. We trade really the following thesis. We trade the idea that price has no memory, only opinion. What I mean by that is support, resistance, Fibonacci, Elliott wave, the support from 20,200 and the Greek era and the Roman support era and all, and the change in Sagittarius, conversion or whatever the F everybody does is all ultimately bullshit. What we trade is what is happening now. And the only way we can know what's happening now is by aggregating opinion, which is what we do by creating all our indicators, basically aggregate opinion and tell us exactly where the opinion is. So really to just, the whole idea of like short-term versus long-term, what does it look like on the long-term charts? It doesn't really matter what it looks like on the long-term charts. We don't give an F. We're not trading long. If we're trading the 1 minute chart, the only reality that we should be looking at is the 1 minute reality. The only reference point we have is the 200 SMA. That's the only reference point we need. So once we focus on the reality at hand, which right now the reality is all green, right? That's all we need to do to trade. And what I was going to show you is that when you go into the filtered mode, which is the filtered mode, basically just looks on the reality. It only picks the signals that are legitimate above the 200 SMA or legitimate below the 200 SMA, right? So, when you look at it, you can see that on a continuation mode, you get, just so long as you take the filtered signals, they're actually excellent. They're that 3 out of 4 winners that we look for, 75% win rate against a 66% break-even rate, right? And that's really all that matters. Now, to me, the bigger nuance, I think, is that when you're trading, and you can see this, by the way, in the NASDAQ, the key liquidity hours, like the places where all of this, filtered continuation, regardless whether it's an up continuation or down continuation, really matters, is from about 6 o'clock New York till about 2 p.m., maybe 3 p.m. New York. 3 p.m. New York, 1500 hours New York. So, sorry, I'm losing my train of thought. This guy who's been I don't know if you guys have been following this annoying little Russian, typical East European Russian bastard, who has nothing better to do than just to torment Kathy. So I'm this close from just blowing him out of the room. But anyways, my point being is that if you just look at turn signals and trend signals between 6 and 1500 on a filtered basis, you'll have a high degree of confidence that most days you'll have a 75% accuracy ratio of those signals, right? Just to give you an idea, let's go back to the front of the week, and let's go back just to Monday, starting 6 o'clock in New York time, and let's look at turns, and then we're going to look at trends. Okay, so we know it's 6 o'clock New York. We have turns. So this is sells. I mean, it's 5 o'clock. Okay, we'll give it a little bit earlier, but 5. You can see a good signal here. Still a pretty decent signal here because it definitely has some continuation. I'm trying to figure out, this is 05 against. Yeah. This still comes into at least 5 points to the downside. Then we turn as the day turns positive. We turn positive. This gives us 5 points, and the turn signals to me should always be no more than 5 points. This is the other very, very important aspect of understanding stuff, is that the turn signals have a remember, like I said to you, just like we're doing the scalp, very limited amount of continuity power, and then all you want to do is just trade them with a 5-10, just like over here. You get 5 points, you're fine. I'll get to the trends in just 1 second. So this is the only one that fails. So we had like 1, 2, 3, 4, 3 winners, 4th loser, right? Then we have 4 out of 5 winners, 6 out of 5 winners, and we're now, where are we? We're at 12 o'clock. I think it is this actually, no, it doesn't extend, doesn't quite give you there. So that's, sorry, 6 out of, so that's 5 out of 6. Now it's 4 out of, no, 5 out of 7. Now it's 5 out of 7. Now it's 6 out of 8. And now this is the final signal This is 7 out of 9. 7 out of 9. Okay. So I literally, haven't even looked at this on the 7th. Like, we do 7 out of 9. 7 divided by 9. That's a 77. That's even a little bit better than 75. So it's a 77% win ratio against a 66% break even. That's all you need. That's my whole point. Is just you got to trust the reality that you're seeing, and you're fine. You're fine on the turn side. Now let's take a look at the trend side. I think I have the trend over here. Is this a trend signals? Yeah. And let's go. Same thing. Let's just even go to the YM because I'm not even. Let's just change instruments and let's go to YM on. Was it Monday? Okay, Monday starting at 6 o'clock in the morning, and let's trade those. Okay, so we got trend buys, and again here we're just looking for tens, just quick tens. So this is a win. This is the market open, so I don't know if we're going to be able to survive this. It's an 87. How high does it go? 97. Yeah, I think we survive it. Okay, that's 2 wins. Oh, sorry, I missed this one. 2 wins, and then this one is probably a loser. It's 14 to. No, I think it makes it 14 to 24. It does make it. So 3-0, 4-0, 5-0. You see how just staying with the reality of the moment. 5-0, 6-0. That's 0 losses. 6-1, first loss of the day, and that's it. And then after 1400, you just don't trade because after that it gets super choppy. After that, all the signals begin to, because what's happening after that, you'll notice, is we're starting to oscillate over. The whole point of our situation, of our structure, is that we got to move continuously down the 200 period SMA slope. That's where we get really great entries. Once we start just oscillating around the 200 SMA, we don't really have trend. We don't have setup. It's not really a legitimate trade. So let's just do one more day here. One more day. So we start again at 6 o'clock, right? So what was that? That was 7-1 or 6-1. Let's just call it 6-1. 7-1, 8-1. I'm buying here at 31. Yeah, more than enough. 9-1. I think maybe this stops me out because this just gets a little bit spiked higher. What is that? That's a 79. Oh, I survive it. 99 is my stop. So it's 9-1. This stops me out. Let's just say 9-2, 9-3, 10-3. Okay, 10-3. And do we have any more? So that's 10-4. That stops me out. And this is 11-4. And then we have, I think, one more, 12-4. Okay, so 12-4, 12-4, 11-4, either way. So 11 out of 15. Let's just say 11 out of 15. That's 2 days worth of stuff. That's 73.3. Not quite where we want it to be. We want it to be, if we did 12-4, that would be 75. But it's still a positive win spread for us. Because remember, we're breaking even at 66. So we're at 73, 74. We're still net positive on the instrument. And that's not, clearly Dow is just not one of my favorite instruments on the move. But you get the idea. That's what I really wanted to share with you, because that to me was the great insight. By the way, remember I told you NASDAQ is going to finally come into the 40s? Look where we're at now. So we're finally coming into the cloud here, coming down to the cloud. This, by the way, so now it's interesting because now we can go into the turn structure. And here's where it gets interesting, because now we have that second turn reverse signal. We gotta figure out, do you guys have any suggestions of how we want to call that second turn signal? I don't even know how I want to call the first one. How do I want to differentiate the two? Turn strong, turn weak, because we're trading off the strong structure. I'm not sure. Those suggestions from you guys? Everybody is everybody's just watching price action. Anyways, turn one, turn two. We can actually, you know what? We might as well call it generically. We might as well just stay as plain vanilla as possible because it's not what they're called, it's what they do that matters. So on turn two, right? When we're trading turn two, if we get a turn two here, we have a chance now because remember, it's been a very, very strong market up, right? That means we have a reasonable chance here that if the price recaptures the moving average envelope, they're going to try and push it back up, maybe to the 50s, maybe to the 60s. That's certainly going to give us hopefully scope for a 5-point win to the upside. Give us a chance to to trade that out. Let's see if this. I'm actually just watching to see if this is gonna. Oh, you know what? I take it back. It's not going to show up because I just realized this. We already had. This has been such a strong trend move that we haven't. This is still the same trend segment that we've had earlier, so it's not going to show up because it's defaulted to just one signal. I guess we could just have fun and see if we can default to 2 signals per cycle and just see if this shows up. Let's just see if it just shows up, and let that trade. And then before we go, I really want to show you the long-term, amazing long-term power of these signals once we go on because we know we're always sticking around on the 1 minute chart, which is always the hardest chart in the world to trade. But like these things pick up unbelievable entry points on a daily charts in FX, and I think it's going to be a monster FX signal for us. Once we standardize on all the rule sets. So okay, we've fallen out. We got nothing. That's fine. We may even this may even turn into a red zone, and then it goes and then it'll create like a turn one signal, which is which will be a turn out of the red zone, which will be okay too. I'm perfectly okay with it because remember they ran the market up about 115 points, 120 points from the open on CPI data that originally everybody sold, and then now that got totally squeezed out because from what I understand, I didn't even read why the CPI data was benign, but it looked to me like basically when I was looking at the CPI data that although the core was hot, it was not as hot as everybody thought it would be. We do have a 5% year over year. It is definitely hot, but bonds are just, look at the bonds. Bonds are just like at 149. It's unbelievable. I mean, like the bonds just absolutely giving no F's about it. And by the way, look at how great the pound performed, right? When we're trading, let's just look at the pound on a 5-minute chart. Right, we had a trade here in the 30s, and I said it's only good for about 4 or 5 points, but like look how well it's turned. And this is like where the value of what I call turn two indicator really comes in, because it gives us that extra high probability entry setup on the momentum side, right? Maybe I think, maybe should we call this? Tell me if you guys like this idea. Turn one is basically turn reversal because it's coming in from the green zone. It's always going to be coming in from the green zone to the downside. So it's like a turn reversal. And turn two should be called turn momentum. Does that make sense? Because it's turn with the flow instead of turn against the flow. Not sure. Does that make sense to everybody? Is that good? Cross, you like that? So maybe that's what we'll call it. This way so turn one will be called turn reversal, and turn two will be called turn momentum. I'll have this indicator for you guys tomorrow morning. We have it's all coded. We're just just working on the last few things and how we call them. Yeah, it's better than turn one, turn two, right? I mean, at least it puts it into context. All right, let's see what's going on over here on the FX side. And if we got nothing on the if we got nothing anymore, we really don't have anything. I mean, yeah. Oh, this is I already. Oh, let me see. Do we have the the Dow? What do I have the turns here? No. All right, you know what? Let's give this a shot. One last trade. Maybe only just like 4 points. I'm only going to just do 4 points here. Let's see if we can just get this because it's tired. It's had a long, strong run, very susceptible to kind of a reversal. But we did clear the. I'm a little bit late. Also, I should have been here at this should have been the entry 40. I would have already been pretty much at TP. So I may have executed this poorly. So I don't know if I love this trade anymore. But I'll stick with it for like 1 or 2 candles. Give it a shot. See if they can push it a little bit higher. All right, you know what I'm going to take? I'm going to take my 2. That was good. I should have had the 4 originally, but you get the idea. So this was, we only give ourselves just one chance in a trend, but this trend was so strong that you certainly had a chance. If I had come in, remember I said to you, we can come in here through this through the cloud. We had a reasonable chance. This would have worked. It may still work a little bit higher, but I just there's no reason. It was bad execution, and I at this point, if I'm trading mean reversion, I can always average into a mean reversion. But I never. This is the other thing that I don't want to do. I never want to average into a momentum trade because momentum trade either works or then it just kind of fails miserably. And if it fails miserably, you're just buying down into a stop. So this, I wasn't going to tactically. I'm not going to add to this position. And therefore, I just kind of let it go. We got a great day today. We did every trade was positive, including FX. And we're back to business because I'm sort of back in the right headspace of just trading the reality that we're seeing right now, not the reality that was yesterday, not the reality that was this week, not the reality that's before, because none of it really matters for the kind of trading that we're doing. We want to trade the current opinion in the best possible entry that we can. That's what we do, right? So I'm going to leave you guys with just one last look. Okay, this is what I wanted to show you. Let's go to currencies. Let's just go to yen, whatever, it doesn't matter. Let's go to yen. Let's go to the dailies, right? I'm going to show you, make sure that, yeah, and let me modify this because I don't need to do this on a 2 signal basis. Okay, 1 signal basis. Look how good both the turn reversal and the turn momentum signals are. This is the yen. Look at Aussie dollar. This is dailies. This is where this really shines. Winner, let me just look at this. Yeah, definitely a winner. If you're using, what I'm typically going to use on a dailies is 1 ATR stop. ATR in Australia is about 60 cents, right? So if you use a 60-cent stop and a 30-cent target, you're a winner here, winner here. Here you're a loser. Sorry, there was one clip. That's correct. So there was 1, 1, 2. So 2, 1. 3-1, 4-1. Again, back to 4-1 is 80%. So back to but in much more meaningful pippages than that. Here's here's cable, which I don't even think has any losing trades here. Cable has like an 80 ATR, so you have to have wider ATRs. But I think all of this survive. Winner, no, I take it back. Maybe this was, I'm not sure. So if ATR here was the way I look at it is at every single point, I want to look where the ATR is. So if we're going to indicators, okay. So what was my ATR over here? ATR over here was like, no, where are we? So we're over here. It wasn't horrible. It was 115. So about 120 pips of stoppages, which means I got to give myself 50 pip of target. So I'm long 33.75. I need to see 34.25 on this trade before seeing 32.75. I actually survived this. So this is the low is 32.84, and then it definitely goes up to 34. Yeah, even this is a winner. So winner, 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 winner. This is 4 winners in a row. And it's just, it's very, very cool. I mean, you're not going to get a lot of signals, obviously, because you're on a daily chart, but you're getting much more meaningful signals, in the trade. Yeah, and the cable today has just been a monster move. What a, just a huge, huge move, into the trade. So this is just a good example of how we can trade this on a longer term basis just as easily as we can trade it on a short term basis. That's what makes it so cool. All right, yeah, cable today is a monster move. I had it a little bit early in the morning. I was actually down on it big time, and then it completely reversed, so that was good. But yeah, I mean, cable today, 5-minute chart would have been a beautiful trade. Cable today, euro today on a 5-minute chart on these turn signals. Where's the euro? Where's the euro doing? Euro today is just doing nothing, actually, because wow, man, Jesus, the ECB was a complete dud. So euro, was it 76? I can't even tell. What I wouldn't have traded the euro today because it's all ECB and it's all garbage. But cable had a pound yen had a really good move. We don't have a signal here in pound yen on the 5-minute chart yet. Let's see, Australia. Does Australia have a signal? Australia had a signal that was nice and clean for you get past the ECB, right? And the signal here was what, 44 against? Oh no. This is a big, big clip. What happened here? Oh, this is all hard talking. So again, I don't know. FX today would have been because of ECB and CPI would have been a very, very tough trade here. How is dollar yen, which is much more non-effective by this? So it didn't have any signals. We had no signals so far on the 5-minute chart. This signal would have stopped you out here before CPI, but I don't think you would have entered into dollar yen before CPI anyways. Let me see what euro yen does. Euro yen would have had nothing either. Oh, what would have been interesting? Pound Swiss. Let's see, pound Swiss. Well, there's a signal here at 8.35 that was good, and I would actually be watching. I actually think because Lagarde was relatively dovish, I think pound Swiss is still an interesting trade here on like a 10-20 basis. So 25.71, maybe not the 10-20. Let's see, what's the ATR here? Sorry, ATR on a daily would be in the pound Swiss, because I always want to look at the daily ATR. ATR daily is just really still weak. It's 75 pips. So you really can't expect more than 5 to 10 pips out of this thing. So if this thing closes at 72, like right now, like on the close of this candle, it might be worth to trade it to like 80 with a stop at 60. Like just that's just kind of a final scalp. I'll let you know how that worked out later today. Anyways, that's it, guys. I hope you really enjoyed it. We had a really, really fun trade. Oh, looks like, hang on a second. I'm sorry. Am I getting something on the NAS? Let me get back in here. Oh, sorry. Where's my NAS? NASDAQ is showing a if you put the depending on how I put my settings, if I don't have the MACD filter, this would show us a buy signal. Yeah, it would show us a reversal buy signal. So you could, without the MACD filter, you might be able to because it's just such a thin thing. Let's give it a shot. If it's 30, let's get 35. See if we can get 39 out of it. We'll see. A little heavy. I'm not loving this trade, actually. Now, forget it. I'm out of it. Let's just stay strong for the day. We've had a really, really great day. Let's not fool around. This signal, ideally you really want that MACD filter. You want a little bit of a red sell-off, and then and then a comeback, because what you want is some evidence of market selling off and coming back instead of just a very, very tight little sell-off that that could be a fake out for a much steeper sell-off to come in. So we'll stay with a filter. I'm not going to fuck around with this. We'll leave it alone. And if it shows up again with a filter, then yeah, then I would be a trader on this thing. Okay. All right, guys. Any questions? Anything else on your mind? Everybody good? Good session today. Made like I think 25 points Nasdaq, 7 or 8 points in pound, and 1 or 2 points in the S&P. So much more focused today. Let's stay like this tomorrow. We're gonna just trade the 1 minute chart, trade the reality in front of us, not the history we think exists, and that's it. All right, everybody have a wonderful day, guys. I'll have the secondary indicator for everybody tomorrow. Take care.